Good morning. Welcome to Stock Market Today. It's Thursday, April 30th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where we give you daily stock ideas to consider, as well as get a lot of the content for this show. Hit your inbox every trading day before the market opens. So U.S. equities finished higher in Wednesday's trading, led by small caps and growth stocks, on the news that Gilead's drug helped patients recover faster than standard of care. On the economic front, the FOMC left rates unchanged, and we got the first look at 1Q GDP, which declined the most since 2008. Treasuries were mixed, with the curve steepening. The dollar was weaker on the major crosses. Gold was down 50 basis points, and WTI crude, in another volatile day of trading, settled up 22%. As we get to the desk this morning, futures are slightly higher, but they've been mixed throughout the morning, and that's on the back of some well-received earnings reports from Microsoft, Tesla, Facebook, and others. Asian markets were higher overnight, but European markets are mostly lower. Treasuries are mixed. The dollar is weaker on the major crosses. Gold is up 1.1%. WTI crude is up 15% to get us going in early morning trading. So I didn't put it on the chart, but the rally took us up to the 61.8% retracement level. The 200-day moving average is just above for the S&P 500, as yesterday's action pushed us through this near-term resistance zone. On the downside, 2750 to 2700 as initial support, 2450 to 2600 should a sell-off materialize, carries the retracement levels of this advance. So just something to keep in mind here, some key levels that we are highlighting here in the near term, as well as bigger picture. On the upside, resistance 2950 to 3005. We'll call 3005 roughly where the 200-day moving average is settled out. We are near term overbought, and Chaikin money flow is bullish. So the rally persists unrelentingly. I know there have been a lot of eyes on this 62% retracement level. We'll see if we get a stalling out here, or if the market just continues to trudge higher. Indicators are mixed, overbought, but with bullish money flow. So just continue to be nimble, stay the course, manage your risk, and ultimately let price dictate. Turning now to our market in a minute. What are we writing about in the note today? Well, we got a big rally in small caps again, and growth stocks jumped in this time on the heels of earnings reports, and that was despite that GDP miss, right? GDP came in for the first quarter, the initial look, down 4.8%, below expectations, and as I said, lowest since 2008. S&P 500, as we just highlighted, achieves a 61.8% retracement of the decline. Breadth metrics improve across time frames, and healthcare services begins to outperform, and futures have been mixed. They point to a roughly flat open here today. Turning now to the major indices and their power bars. The Dow added a little over 2% yesterday, 3 to 11 bulls to bears there. S&P 500, 2.6% to the good, 66 to 140 bulls to bears. NASDAQ was an outperformer. That's the growth element of leadership yesterday, up 3.43%, and wouldn't be surprised to see that add on a little bit here today. 27 to 21, that ratio now flips in favor of the bulls. Small caps as well flips in favor of the bulls, up 4.9% yesterday, 390 to 304 bulls to bears. Bonds down tick slightly. Energy had a big day once again, up 7.5%. Still 0 bulls for 14 bears there. But we've talked about energy quite a bit this week, how the stocks have defied what was going on in crude oil, and now you're getting a crude oil rebound as a little bit of a tailwind to the energy space. Turning now to our stocks, plural, of the day. In my note today, I'm highlighting the fact that healthcare services is shifting its relative strength. XHS, we'll take a look at the fund a little bit later in the show, but I'm highlighting it today as potential emerging leadership. And what I wanted to do was take a look at the holdings of that fund that have very bullish or bullish ratings, as well as strong relative strength. So essentially what we'd be looking for here are leading stocks in what could be an emerging leadership area of the market. And you get 10 names that kind of fit the bill there. Names like Anthem, Cigna, Centene, right? You can see them all here, Humana, LabCorp, Molina, right? So these are some interesting names that could be potential candidates on the long side of a portfolio. as of today, Cigna, Centene, and Humana are oversold based on our overbought, oversold indicators. So if you're looking for leadership in this market, if you're looking for strong stocks that are in an emerging area of the market that could be coming out as leadership, here are 10 names for you to take a look at, do some additional research and analysis. And I'm highlighting this group in my note today, notwithstanding the market tagging the 62% retracement level. For those drilling down on the names, I mean, these are names that you want to consider, right? You want to do some research here, dig in, right? Big universe of stocks out there. Always helpful to have a somewhat systematic method of identifying where the leadership could be. And these 10 stocks, to me, definitely warrant our attention and possibly more work as potential long ideas. So taking a look at our sector tracker now over the last 5 days, energy still at the top of the list. We've talked about that quite a bit. Materials, fins, and industrials continue to be in the top 4 spots as we've had some of the most beaten down areas of the market rebounding. Discretionary comms and tech are middle of the road. And then your defensive groups over towards the bottom of the list. Real estate, healthcare, staples, and utilities being the only group that is lower over the past 5 days of trading. So potential signs of leadership shifts, right? We're going to continue to watch them as we've been saying all week. Right now, tough to say whether it's counter trend within the context of bigger picture downtrends, but we want to sit up and take notice, especially when groups like energy do what you don't think they should be doing, which is go up in the face of a precipitous decline in the price of their underlying commodity. Taking a look at our industry in focus now, biotech services. Now, this is a group that I highlighted last week in one of my notes for clients. It's been an outperformer over the past 6 months, right? So if you're looking for leadership, here it is. The XBI is the ETF, outperforming the S&P 500 by 21.5% with a strong power bar ratio. 36 bullish or very bullish stocks for only 17 bearish or very bearish stocks. And that gets it a rank in the top third, number 7 of 21 subsectors that we track. Has moved down 5 slots over the past week, but some names there, right, that you may want to dig in, do a little bit more work. Alexion, ALXN, Biogen, BIIB, and Vanda Pharmaceuticals, VNDA, all have very bullish Chaikin power gauge ratings. And as we kind of look at the fund itself, XBI, again, the SPDR S&P Biotech ETF has a very bullish Chaikin power gauge ETF rating. We discussed the power bar ratio. Fund is in a strong trend above a rising long-term trend line as it consolidates just below recent highs, right? So we want to pay attention here as the fund works off an overbought condition and moves towards oversold levels. We have a very bullish ETF leading the market with bullish money flow, working towards an oversold condition as it consolidates up here near the high. So big rally off those lows, a little bit of a consolidation, but this is certainly a leadership group within the marketplace. No two ways about it. Whether you're looking at the funds, whether you're looking at the stocks themselves, if you're going to dig in on biotech stocks, though, I always advise, my thought is that you dig in, right, on the individual names and the individual stories and make sure you're well aware of what are the potential catalysts. Turning now to our trending names. Yesterday's S&P 500 gainers and losers. Norwegian Cruise Lines, part of the reopening basket of stocks, up 25% yesterday. Noble, NBL, up with the price of oil. Didn't see anything company specific there, 23.31%. APA, up 22.3%. FTI up 16.5%. All these stocks are still bearish. Again, fundamentals around the energy patch has not changed all that much, but we got to sit up and take notice of price trends. And then Diamondback, a long time, very bullish stock, now has a neutral rating here at Chaikin Analytics, up 16.3%. I do note that it did catch an upgrade earlier this week. On the loser side of the board, Hasbro reported earnings. Investors take 6.3% out of that stock. SBAC down on the American Tower print. These cell tower companies have been strong of late. A little bit of profit taking there. SBAC gives back 4.5%. Akamai earnings report and a downgrade today. Stocks down 4% yesterday on the back of their earnings report. SJM, nothing company specific there. Stock down 3.75%. and CHRW is a very bearish stock that lost 3.7% yesterday on the back of some reported volume statistics. We'll note, though, that it did catch an upgrade here today. So let's look at the charts now. It's Thursday. We do market breadth on Thursday, and breadth continues to improve across timeframes, really. The percentage of stocks in the S&P 500 above their respective 200-day moving averages, getting back above that key 30 level here in the near term. Generally sustained breaks down here are not healthy for the market in general. And if we can get back above them, that would be a continuation of bullish sign and confirmation of the trend. In the intermediate term, the percentage of stocks above their 50-day moving averages, their respective stocks for the S&P 500 is over 75%. Again, generally forward returns look okay when this metric crosses above the 75% level, at least in the near term. And then even on a shorter term basis, we look at the percentage of stocks that are above their 20-day moving averages, their respective 20-day moving averages, and that's at 90%. That honestly is a little bit overdone in the near term. Again, so that's kind of interesting as the market's hitting the 62% retracement level of the decline. You could potentially be short-term overbought. Remember the indicator that I showed you earlier, the S&P 500, that 13-period CCI. Is in an overbought condition. So, just some things to keep in mind, right? As you're gauging the level of aggressiveness in the marketplace. Breadth metrics are improving, maybe a little bit overdone in the near term. I will note that the foreign stocks that I track, the international market is kind of interesting. The ACWI back above its 50-day moving average, but the 37 country ETFs that I track, none of them are above their 200-day moving average. There's still some work to do from a bigger picture trend perspective in the foreign markets. But generally speaking, breadth is moving in the right direction with price, right? We're not seeing divergences. Remember when the market was making a new high, we were highlighting these divergences in these breadth metrics, not seeing them just yet. So something, always keeping an eye out. But breadth metrics are continuing to improve here in the near term. Let's talk about that crude oil and now the E&P stocks. So not just energy in general, but E&P, right? There's the decline in crude oil, right? No two ways about it. But we've had a nice snapback rally here in the near term after actually going negative, right? This is a blend of contracts, but the front month contract went negative, and still some work to do below the $20 level as far as I'm concerned. Exiting an oversold position, but check out the E&P names. XOP has been rallying since the market low, right? And even in the face of further declines in the price of crude oil, continues to move higher, right? So that's the type of thing, again, that we sit up and we want to take notice of. Start paying attention. Start maybe, potentially looking for subtle shifts in ratings, et cetera, across this landscape. What I think is kind of playing out here, and this is just my opinion, as I pay attention to what's going on. I think that the pressure on crude oil and the highly levered nature of these companies is going to force bankruptcies, right? We've seen Diamond Offshore file, rumors that Chesapeake could file. And I think what you're going to be left with, and when investors are potentially discounting, is a group of the survivors, right? And if the names that make it out of this, maybe investors are seeing a more rosy future, at least on the margin for those companies. That's just my view. As always, we let the charts tell us what's actually happening because the market doesn't care what my view is. XHS, I said we talk about healthcare services, and here it is, right? Now, big rally off the lows, back to the 200-day moving average, above the 50-day moving average. Overbought in the near term, but what intrigues me is the breakout relative to the S&P 500. You can see we've broken this near-term downtrend line, broken back above a key level and continuing to move higher. So again, as markets rotate, we're looking for signs of emerging leadership, and healthcare services is one of those names. Go back earlier in the slide deck. I showed you some stocks that potentially look interesting. So that's going to wrap us up for a Thursday. Head over to chaikinanalytics.com/test drive. Sign up for a free 14-day trial. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.